My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Other people make friends and just trying to make you some money. Because my job is not just to entertain, but to educate, teach, and put bad days like today in context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Themes. I always fall back on bullish themes. That's the best way to approach a sell-off like we had today with the Dow. Oh, geez, losing 383 points. The S&P sinking 1.48%. Nasdaq falling 1.47%. But believe me, it was much worse at one point. Themes are very useful if you've got some cash stockpiled after last year's remarkable run. Remember, the S&P was up 16%. Nasdaq, some of these names just roared higher endlessly. It was insane. So look, on a bad day, it's easy to eyeball the stocks that went up and assume that maybe they're the screaming buys for the year. I mean, there were plenty like that. CVS jumped 2.5% after JP Morgan, Berkshire Hathaway, and Amazon abandoned their joint venture that was supposed to transform the healthcare industry. And it doesn't hurt that CVS stands to make a fortune from vaccine distribution. ICPVH, parent company of Calvin Klein and Tommy Hilfiger, up nearly 3% on a brokerage push. Hey, same with Lululemon. That rallied 8 points. Financial management, well, you know what? Those are starting to take off. Modest rallies led by former underperformer Goldman Sachs, because this is a good time to be an investment bank. Tesla jumped again. I mean, why not? I mean, that feels unstoppable. Now, you rarely go wrong buying up stocks like those on a down day. If we catch a strong day tomorrow, those stocks will be the first to rally because they were stonewalls when everything else was crumbling. And you can... But that's a short-term idea. That's not what we're about on Mad Money. We're not looking for stocks that can stand. Look, here's what we want. We want stocks that can stand the test of time, not for tomorrow, not for next week, but for the year and beyond. Because there are real reasons why the market went lower today. So you need stocks that actually get more enticing as they go lower from these exogenous reasons. What's driving us down? Well, first, Wall Street's eager to have a divided government because it can't accomplish anything for the next years. But we've got these two Senate runoffs in Georgia, and the president's recent annex could throw both races to the Democrats. If that happens, there's a chance Biden could raise taxes. Although I think it's pretty slim. We don't like taxes if we like higher stock prices. Second, stocks are up so much that I think plenty of people are just kind of waiting to ring the register in the new year. Take some profits. Third, President Trump doesn't seem to believe he needs to leave the White House right now. And some Republican senators want to follow his lead and challenge the election. Okay, seems like a doomed effort, but Wall Street hates uncertainty. Most importantly, there's the vaccine. Now, we've got two of them, with a third that should be approved soon. The scientists did an incredible job. Operation Warp Speed was pretty good, but we're doing just a horrendous job of actually distributing them to people. The states have no idea what the heck they're doing. Well, why should they? Vaccine stockpiles continue to grow. How is that possible? Some of them are going to expire before they can be used, even though we have a serious shortage. The new, more frightening, more transmissible strain is on the rise, and we can't even stop it without a vaccine. The White House has dropped the ball here, and that means the pandemic could last longer than we expected. So which themes in that environment can we fall back on? Okay, let's go right through them. First, e-commerce. It's still growing, not shrinking. Well, I like Amazon. I like Shopify. You know that. I'm betting this will be the year of Walmart and Costco. Walmart's digital business is already well on its way. Now, Costco's been behind. But now they've gotten serious. And when they get serious about something, bingo. Even when nobody's, let's say we get everybody's vaccinated. I mean, God knows when that's going to happen, right? E-commerce is here to stay. Americans have tried it. They like it. They trust it. It's a bargain. They're not going back. And that also means the freight forwarding stocks are bargains too, and they got slammed. I mean, they were crushed today. Take a look at them. Now, second theme, this is a new one for you. I want you to start buying the travel and leisure stocks on down days, because sooner or later we're going to figure out the logistics of the vaccine. And then these industries are going to come roaring back. Now, you know, I've already told you that I like Boeing for world travel, but Uber for local transit, Airbnb for the safer, cheaper alternative to staying at a hotel. Airbnb has a huge advantage during the pandemic, but even when we go back to normal, I'm telling you, they will keep these customers and it will grow 13 digitization. Hard to believe that this story isn't already played out, but it's not. So many companies still think the cloud has something to do with the weather. Others don't want to take the hit from switching software systems. Doesn't matter, though. At this point, they have to. The value proposition is just too good to refuse. How do you play it? Well, how about AMD? Hey, why not NVIDIA? See that stock today? These are major digitization theme names that are engaged in takeovers. AMD's buying Xilinx, and NVIDIA's buying ARM Holdings. Now, these aren't going to close anytime soon, but it's going to make them stronger in 2022. People will buy them in 2021. Theme 4 is cybersecurity. Now, we've had all the major ones. All the major ones on our show. We have CrowdStrike and Okta, Zscaler, Palo Alto Networks. I like them all. They all work in a world that's embracing the cloud and digitization because businesses have a lot more data to protect. Hey, by the way, I also like Norton LifeLock, which is a very cheap stock with a good dividend that seems ripe for a takeover that does personal security. Fifth theme, the 5G build-out. Now, this is going to be huge, and it's only just begun. Now, my favorite 5G name, as you know, is Marvell Tech, which had its numbers bumped just today. But almost all of the semiconductor plays have tons of 5G exposure. Qualcomm and Skyworks can be your placeholders. Throw in some Internet of Things names. How about Texas Instruments? You see that stock? NXP Semi up today. Well, and then you get the picture. Theme 6, the stimulus package. We saw how we saw how this works in the spring. You remember this? Remember what worked? Okay, I'll refresh your memory. Walmart, Target, Home Depot, Lowe's, Dollar Tree, Dollar General. Don't overthink it. That's the movie. We've seen it before. 7. Please don't forget China. No matter what you hear about the People's Republic, where in the world is Jack Ma? President-elect Biden simply won't be as tough on the Chinese government as Trump. No, he won't be. If Biden ratchets down the trade war, you have to expect China will extend an olive branch by ordering some Boeing planes along with machinery from Caterpillar and 3M. China needs more aircraft anyway, so it's easy for them to throw Biden a bone by ordering some 737 Maxes and 787s. This is the primary way about how the U.S. government could possibly be paid back. Remember, here's what you need to know. Boeing employs 2 million people directly and indirectly, and they've spread that over a ton of congressional districts. Stock got crushed today on 787 order worries. Other potential China winners, how about MasterCard? How about Visa? How about American Express? They can all work. If they're allowed to operate independently over there, and I think they will dovetail nicely with the travel and leisure theme. How about 8? There's a bull market in stock picking and wealth management. And that means Goldman Sachs. That means Morgan Stanley. And yes, here, how about Robinhood once it comes public? Buy, buy, buy! 9, remote work is going to be the new norm. It's more convenient for employees. It's much cheaper for their employers. That's not changing. So I still like the remote work facilitators. Hey, Zoom is finally up there. You see that? Salesforce.com, once it closes on the Slack deal. Microsoft down really badly. Even Dell, HP, and Apple. Hey, by the way, you know me. I stand by Apple as always. I would say own it. I wouldn't trade it. New theme for 2021? Not. Finally, 10. Healthcare. A Democratic White House means the Affordable Care Act is here to stay, and that's great news for the managed care companies, which practically wrote the law. Again, I like the CVS as well as Humana, United Health Group, and then J&J, with the latter being best positioned for both earnings, new products, and maybe the vaccine when they finally get it done. Oh, by the way, it's also the best weak dollar play there is. Now, there are plenty of other one-off ideas that work here. You know, I think Facebook's cheap versus its growth rate. I like AbbVie and Dow for their dividends, Penn National for gaming. But the bottom line, it's these long-term themes that work the best. You can buy them tomorrow, and then you can buy some more if they get knocked around the next day and the next. The great thing about these theme stocks is they all do get cheaper as they go lower.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.